Imagine a world where your wealth grows exponentially without you lifting a finger. Sounds too good to be true? Well, welcome to 2024. This is the era where smart investments rule, and building wealth has never been easier. Today, we are uncovering the secrets of the 10 assets that guarantee you get rich in this brave new world. From real estate to startups, these assets are your golden tickets to financial freedom. Stay tuned as we delve into these 10 assets that guarantee you get rich in 2024. First on the list, and perhaps the oldest trick in the book, real estate. When we talk about solid, time-tested investments, real estate rarely falls off the radar. It's a tangible asset that, unlike stocks, you can touch, see, and utilize. But why is it such a magnet for wealth generation? Well, real estate offers several avenues for income and appreciation. You can earn a steady cash flow through rental income, which is a beautiful thing, especially when it outpaces your mortgage payments. Over time, the property itself can appreciate, leading to a significant increase in wealth when you decide to sell. Additionally, real estate can provide tax advantages and act as a hedge against inflation. As living costs rise, so does the value of your property and the rent you can charge. So, if you've got a knack for spotting potential in properties, real estate could be your golden goose. Next up, we have stocks, the classic wealth creator. Now, you might think of stocks as a high-stakes poker game, but it's far from that when approached with knowledge and strategy. Let's break it down. Stocks essentially represent a slice of ownership in a company. When you purchase a company's stock, you're buying a piece of that company's future profits and growth. This can translate into wealth in two primary ways: dividends and capital appreciation. Dividends are a portion of the company's earnings, distributed to shareholders. That's you. Think of it as your share of the company's success. But that's not all. The value of the stocks you hold can also increase over time. This is known as capital appreciation. So, when you sell your stocks at a higher price than you bought them, you make a profit. So you see, stocks can indeed be a powerful tool for wealth accumulation. Remember, the stock market isn't a gamble if you play your cards right. Moving on to the digital frontier, we have cryptocurrency, a fascinating blend of technology and finance. Cryptocurrency is the modern maverick in the world of assets, born out of a desire for decentralization, privacy, and currency without borders. Cryptocurrencies like Bitcoin, Ethereum, and many others have been making waves. Now, the volatility of cryptocurrencies is something to note. It's a double-edged sword that can lead to substantial gains, and yes, losses too. But remember, higher risk can mean higher reward. And with the global adoption of cryptocurrencies and blockchain technology on the rise, it's clear that these digital assets are more than just a fleeting trend. Not to forget, cryptocurrencies offer the advantage of liquidity. You can buy or sell them at any time of the day, unlike traditional stock markets. They can be an exciting addition to your asset portfolio, offering a new avenue for wealth creation. So, ready to ride the crypto wave? Now, let's talk about mutual funds, the friendly neighborhood wealth creator. Mutual funds are often seen as the go-to investment option for those looking to create wealth over the long term. They offer a way to diversify your portfolio without having to manage individual stocks or bonds. Imagine you're at a party. Instead of trying to juggle conversations with everyone individually, you hire a professional party planner who ensures everyone is entertained. That's what mutual funds do. They pool your money with that of other investors and hire a professional fund manager. This manager then invests in a potpourri of assets, stocks, bonds, and others, spreading out the risk and potentially offering steady returns. With mutual funds, you don't put all your eggs in one basket. You spread them across multiple baskets, reducing the risk of a catastrophic loss. Diversification is the name of the game here. Remember, mutual funds are all about playing the long game. Moving on, we have bonds, the reliable wealth accumulator. Bonds, often seen as the stoic elder sibling to the more volatile stocks, have long been a go-to asset for those seeking a steady stream of income. But how do bonds work? Well, when you buy a bond, you're essentially lending money to an entity, like a corporation or government. In return, they promise to pay you interest at fixed intervals and repay the principal amount when the bond matures. Think of it like a formal IOU with interest. The interest payments can be a consistent income source, especially for those in or nearing retirement. And when the bond reaches maturity, you get your initial investment back. As simple as that. While bonds may not offer the adrenaline rush of cryptocurrency or the potential for skyrocketing values like stocks, they offer stability and predictability. So bonds may not be the most exciting asset, but they sure are reliable. Next, let's shine some light on gold, the timeless wealth preserver. Gold, the shimmering metal that has dazzled civilizations for centuries, has always been a reliable asset. When economies tremble and currencies wobble, gold stands firm, often even appreciating in value. That's because gold is a global standard of wealth, unaffected by inflation or currency fluctuations. Now let's talk about gold as a safe haven asset. When storm clouds gather over the economic horizon, investors often seek shelter in the secure arms of gold. It's like a financial umbrella, shielding your wealth from the unpredictable downpour of market volatility. But remember, investing in gold doesn't mean you need a vault full of bullion. You can invest in gold through exchange-traded funds, gold mining stocks, or digital gold. Each of these avenues come with their own pros and cons, so it's crucial to do your research. Remember, all that glitters is not just gold, it's also potential wealth. Now, for something a little different, art and collectibles. While these may not be the first assets that come to mind when you think about investing, their potential is not to be underestimated. Art and collectibles such as vintage wines, classic cars, and rare stamps offer a unique and tangible investment opportunity that can yield significant returns over time. The beauty of investing in these unconventional assets lies in their potential to appreciate in value. Unlike traditional assets like stocks or real estate, the value of art and collectibles is often driven by their rarity, historical significance, and cultural value. This means that their worth can increase significantly over time, especially as they become more sought after. Moreover, investing in art and collectibles allows you to combine your passion and your investments. You can enjoy your collection while knowing that it could also be increasing in value. So, diversify your portfolio, invest in what you love, and let your passion work for you. So who knew your passion for art could also make you rich? Next up, we have peer-to-peer lending, the modern wealth creator. This is an online platform where you can lend money to individuals or small businesses in return for interest. It's like being the bank, but without all the brick and mortar. You provide the loan. They pay you back with interest. These platforms can yield high returns. The interest rates are often much higher than what you'd get with a traditional savings account. However, the risk is also greater. If the borrower defaults, you could lose your investment. This is where risk management comes in. It's essential to diversify your loans across different borrowers. This way, if one borrower fails to repay, the impact on your overall portfolio is minimized. Also, consider investing in loans with a lower risk profile. They might offer lower returns, but they also pose less risk. It's all about balancing risk and reward. Remember, with great risk comes great reward. Now, let's talk about private equity, the behind-the-scenes wealth generator. Imagine being a part of a company's journey right from its infancy, nurturing it, and then reaping the rewards when it grows up. That's what private equity investment is all about. While stocks let you share a slice of a public company's pie, private equity allows you to dig into a private firm's feast. You become a part owner of these companies, sharing in their profits and growth. The potential for high returns is considerable, but remember, so are the risks. The magic happens when the company you've invested in goes public or is sold. That's when your equity ownership translates into capital gains. Yes, it's the same as selling a stock at a higher price than what you bought it for, but with private companies, the scale can be much larger. So ready to take the plunge into the world of private equity. And last but not least, we have startups, the future of wealth creation. Startups, the new kids on the asset block, have the potential to offer astronomical returns and are increasingly becoming a key component of smart investment portfolios. These young businesses, filled with innovation and ambition can become the next big thing, and owning a part of them can translate into significant wealth. This is where the concept of equity ownership comes into play. As an investor in a startup, you're not just throwing your money into a black hole, you're buying a piece of the company. If the company does well, your equity stake can multiply in value, offering exponential growth. But let's not sugarcoat it. Investing in startups is risky. Many startups fail, but those that succeed can yield returns many times over the initial investment. It's a high-risk, high-reward game. Remember, today's startups could be tomorrow's tech giants. So there you have it, 10 assets that guarantee you get rich in 2024. We've journeyed through real estate, stocks, cryptocurrency, mutual funds, bonds, gold, art and collectibles, peer-to-peer lending, private equity, and startups. Each holds a unique potential for wealth accumulation, offering diverse avenues to grow your financial portfolio this year. If you found this video informative, don't forget to subscribe for more wealth building tips. And tell us, which asset are you most excited about?